Hi, and welcome to Three Questions with. Got my buddy Carlos Vargas with us from Vargas and Vargas. Hey, Carlos, welcome to the show today.
Hey, thanks, Devin. Nice to be here. Thanks for the time.
Of course. So why don't we start beginning? Give us a little overview of Vargas and Vargas.
So I started Vargas and Vargas in 1980. Started out of my car, then opened up an insurance agency, brought in my two partners, and today there's four partners at the agency. We do insurance all over Massachusetts, from the North Shore all the way down to P-Town, all the way out to the Berkshires. We e-sign everything. So we've been at it since 1980. So with 42 years. So
Wow, that's pretty impressive.
Yeah, wonderful.
So
thank you.
A lot about first-time home buyers, the challenge of finding a home.
Yeah.
How does that play out in insurance? Is there anything specific for first-time home buyers in regards to insurance?
Yeah, we do a lot of first-time home buying classes, and a couple of things a couple of nuggets of gold that I drop is, if you don't own a home now, pick up a renter's insurance policy, because that renter's insurance policy will give you credits for not having claims, and you can roll those credits into your homeowner's policy. Make sure that you have good credit because with bad credit, you're going to pay a higher interest rate, and you're going to pay higher rates on your homeowner's insurance policy. One of the things that we're finding is the insurance rates have gone up a little bit, but the insurance rates have gone up based on the replacement costs. Like, we hear about construction costs are up 20%, 30%, cost of labor, plumbing, wiring. So that all has an effect on the cost of the insurance. Like, as an example, a son of mine purchased a home, 1.2 million, they paid for it. We insured it for about $800,000. The difference between the 800,000 and the 1.2 is a piece of land. That piece of land is worth $300,000 or $400,000. The home burns down to the ground. The piece of land is not going to go away. The foundation is still there. The plumbing, the septic system is still there. So we're there insuring the building. So with a first-time home buyer, many of them, what I advise is, as you're starting to look for homes, say, hey, is the insurance cost in Haverhill the same as the insurance cost in Lowell? No, it's not. Single family in Haverhill is cheaper to insure than a single family in Lowell or Lawrence or Andover. So the insurance costs vary from community to community. So as you start to look at insurance, as you start to look at homes, if you find a home at 123 Birch Street, call your local insurance agent and say, listen, how much would it cost to insure a home here? And we can quickly pull it up. Today, with artificial intelligence and Google Maps, we can say, yeah, the home has a replacement cost of X to insure, and this community is here. But if you're looking at a home the next community over, that's 30% cheaper to insure, and the cost of taxes and everything else and insurance is cheaper, then why not go there? Does that make sense?
Yeah, a lot of people, don't think about that and stuff. And like you were just saying about replacement costs, where you get that homeowner's insurance policy, it might be a little higher. You're like, it's the same house, but like you said, because of all the costs are going up, God forbid you have to replace it. It's only natural that it's going to cost more, and thus they have to pass on that cost.
And one of the things that we're seeing that is reflecting on the cost of insurance is claims. So fires out west, all of that water, all of the rain, all of the dams that burst in Germany are having an effect on the cost of insurance here, because all insurance companies, like when you buy an insurance policy with Arbella or Liberty Mutual, they grab a little bit of that exposure, but then the rest of it goes to the market that will insure them for that exposure. Yep. So those insurers are insuring in Germany, and they lost $1.2 trillion in Germany. So all the reinsurance rates go up because the cost of insurance is spread across the world, even though Germany's got nothing with Massachusetts, but we're all going to the same reinsurers, and they're spreading that risk across the world. So fires out west, all that water damage in Germany last year is having an effect on the cost of insurance in all states.
Sense. So Carlos, we often see commercials talking about the importance of bundling insurance. Does that really help?
Yep. So yes, but it really what helps is doing business with a local independent insurance agent. Like I started off as a direct writer. I worked for Prudential Insurance in 1980. And when a client came to me, I could only offer them Prudential product. So it is what it is. Since then, I've become an independent insurance agent. And as an independent insurance agent, I represent many insurance companies. So Arbella might be great on your home, but not great on your auto. And we write your auto with Plymouth Rock or Travelers or Safeco or Vermont Mutual. So bundling is important, but having your auto and homeowners insurance with one insurance agent, hopefully a local independent insurance agent that can now shop around for you. Just as an example, one of my neighbors, she was insured with one company and she was paying $3,000 a month for her home and her two autos. We were able to move her condo to Travelers and her autos to, I think it was Mapfre, and we saved her almost $800 a year. So they're insured with two different carriers, right? Mapfre says as long as they're insured, as long as their property is insured with you, Carlos, then we'll give them that multi-policy discount.
Yep.
Mapfre wasn't competitive on the condo, so we broke them up and we still save them $800 a year over their bundled insurance. So really what I'm saying is it pays to call your insurance agent every 3 years. Our system looks at all the policies that renew. We look at it every single year. So if Arbella has a rate increase, we can shop it around with all of our other carriers or Travelers or whatever,
But that seems to really be the advantage of the independent is, like you said, because you have multiple companies to work with. If there is a change or, hey, something changed in the property profile, that maybe something changed, now you can look and try to save money, because that's what we're all looking to do. But we want to make sure we're insured properly. Where, I see people looking at the deductibles. I'm like, Carlos, you're my friend. I know you don't have $1,000, my friend. So that's your deductible. What's going to happen? God forbid you have a claim if you don't have that 1,000. So you got to think about stuff like that too. Compare apples to apples type of thing, Carlos.
Exactly. So just going back to the deductible here, continuing with the deductible, the higher the deductible, the more you pay out of your pocket. But the problem with going with a lower deductible and you putting in a claim, now your rates go up because you've lost all kinds of credits. So the system is built, the insurance system is built to pay in the event of a large loss, right? You have a fire, a tree falls on the house, a car drives to the house, that's something. But the insurance policy, the insurance company is charged almost the same for when your front door blows off as it does when the tree falls on the house, So the expense of filing that claim, processing that claim is almost the same. So the goal for the insurance company is to make it attractive to go with a higher deductible, so that if you do have a claim, the insurance company is there to pay for that huge loss. The flip side of putting in too many claims is you're going to lose your loss-free credits, and you're probably going to be non-renewed. And this happens with all insurance companies, whether it's a direct writer insurance company or an independent insurance company. If you file too many small claims, they're going to say, hey, the Vargases aren't maintaining their property. We don't really want to insure this property anymore.
Yep.
Every year or two, there's another claim that we file. It's a small $500 or $600 loss. We lived in a home for 33 years, and over those 33 years, I had a $2,500 deductible, right? I was on the hook for the first $2,500. I never had a claim. The savings between a $250 deductible and $2,500 was almost $300 a year. $300 a year over 30 years is $9,000.
Yeah.
I saved $9,000 again. But if a tree fell on the home, a car drove through the house had a fire, I would only come up out of pocket the $2,500. The rest of it was covered, right? So in those 33 years, we never had one claim. We had some damage, but it didn't meet the deductible, so we didn't file a claim. So the savings of $300 a year over 30 years, I saved about $9,000 on my insurance.
Makes perfect sense.
And And many folks go years without a claim. So if you carry a small deductible for a long period of time, then you 8 to 10 years later, you've paid for that deductible and then some. So the savings is not great when you carry a small deductible.
So, Collins, what's the best way for people to reach out to you? How can they learn more, my friend?
They can go to vargasinsurance.com. We work as teams. We have a customer service team. We have a quotes team. All of my partners are involved in rating and servicing the clients. We're fortunate to insure families from Haverhill, Lawrence, Lowell, over down to P-Town and all the way out to the Berkshire. So we're local. We e-sign everything. We can make it as convenient for the client. 617-298-0655 or vargasinsurance.com.
Collins, really appreciate you taking a couple minutes to come on the show. And as always, thanks for being my friend.
Yeah. Thanks, Kevin. Pleasure to chat with you again.